Hello and welcome to this e-learning course by ClearTax on income tax return filing. My name is Preeti Khurana. I'm a chartered accountant and I work with ClearTax. Today we are going to learn all the basics and everything important that is to know about income tax returns which are to be filed in India. Let's begin this course right away. Before I begin with the e-learning course, I would like to announce today's ClearTax champion. His name is CA Shashwat Gulati. He's from Dehradun. He's our winner for today. He's the ClearTax champion. Now, the ClearTax champion is someone who is helping the nation become GST compliant, even though there's a lockdown happening. So, if you're being GST compliant, you're filing your tax returns on time, you're paying GST taxes to the government, then you can also be a ClearTax champion. So get in touch with us. You can get featured here. You can send in your entries at gstsupport@cleartax.in. So kudos to CA Shashwat. You're inspiring a lot of other people and has an opportunity for you to get featured. So don't forget to write to us. All right, now let's begin with our e-learning course. This e-learning course is all about the basics of income tax return filing, right? This course will give you an overview of how income tax returns are filed, what is an income tax return. So in my view, this is an essential course for somebody who doesn't know anything about tax returns. Even for CAs, if you're just starting out with direct tax returns and you don't understand them or you want to know more about them, or you're looking for information which tells you in a very basic and very simple and easy format everything that you should know about income tax return filing. Now, before I begin, let me just give you a little bit backdrop about ClearTax. We are India's #1 income tax return filing website. Lakhs of people use ClearTax to file their tax returns. If you're a CA, you can do bulk e-filing on ClearTax, which means that if you have many clients, you have 500 clients or so, you can file all of those tax returns on ClearTax, right? So let's dive right into this course and learn what income tax return filing is all about. Has a little bit information about how this course is structured. I'll try to restrict myself within this time limit. We'll talk about the different kinds of taxes that exist in India. We learn some important terms of income taxes. We will learn about the 5 heads of income. Then we'll talk about certain essential documents, some basic documents that you must have when you're preparing your tax returns. And then we'll have an overview about the various ITR forms that exist. All right. Here's a quick snapshot about the kinds of taxes that exist in India. Very simply, these are the direct taxes and the indirect taxes. Now, direct taxes is something that you pay directly, which means you pay from your income. So you earn an income, and from that income, you pay a tax to the government, which is the direct tax. It is also called income tax. The other type of tax is the indirect tax, which is nothing but goods and services tax or GST. Now, why is it called an indirect tax? It's called an indirect tax because you're not paying it directly from your income. You will pay it when you're buying certain goods or services. Say you buy a packet of biscuits, it'll have a certain indirect tax already built into the price of it. So when you pay the retailer 10 rupees, it may be possible that 50 rupees or 50 paisa or 75 paisa may be going to the retailer and from the retailer to the government as GST, right? So broadly, 2 types of taxes: direct taxes and indirect taxes. Now, direct taxes are paid by individuals when you pay from your income, and direct taxes are also paid by companies, by enterprises, by all sorts of businesses. So whenever you earn an income, the government says, give me a share of your income as taxes, and that tax is direct tax, right? The other, like we already said, is indirect taxes, which is on sale of goods. It could also be on services. Say when you pay your mobile bill, you'll see that your total bill may have been 1,000 rupees, but you may be paying a little bit extra, a little bit over and above, and that is the indirect tax you pay. Yeah, I'm sure a lot of people think that why so many taxes? Why am I paying both direct and indirect tax? Well, that's the structure that most countries follow for collection of taxes. Ever since GST was implemented back in July 2017, we've had primarily only these two types of taxes. But before GST, we had a whole lot of taxes like entry tax, which was charged by states when goods were moving from one state to another, or there could be a central sales tax, there was VAT, and there was this a whole lot of taxes which I'm sure you don't want to know about anymore. So right now, just two types of taxes that all people who are in India, they pay are these two types of taxes. Right. Now that we have an overview about the kind of taxes we pay, let's talk about the relevant tax authorities. And there are a few other websites and things that you must know about direct taxes, right? So, like I said, this e learning course is all about income tax return filing. It's not about GST filing, but we do have a course on GST return filing and compliance as well. And you can always take that up also. But today we'll talk about everything that has got to do with income tax return filing. Now, the first and foremost entity or the authority that you must know about direct taxes is the CBDT, right, or the Central Bureau of Direct Taxes. Now, this is an authority which is, quasi government, and they lay down all the rules and regulations. They issue notifications. You can almost say they make laws around direct taxes, even though the laws are passed in the Lok Sabha by our legislature, but the implementation, the notification, and all of that happens through CBDT. So this is one authority that you're going to keep coming across if you're dealing with direct taxes. Another important website that you must know about is the income tax website, which is called incometaxindiaefiling.gov.in. Now, this is the website where all income tax returns are filed. But let me just tell you that ClearTax is also a very important website that you must know about. You can file your income tax return completely through ClearTax. You don't need to go to this particular website. And in fact, our process is even more simplified. So I suggest that you go and create a login on ClearTax to understand how income tax return can be filed on ClearTax. The other important thing around direct taxes is that we have an Income Tax Act. Now, this is the law, like this is the Gita of direct taxes, right? Everything on how an income should be taxed, what kind of tax rates should apply, who should pay tax, when these taxes have to be paid, how your income tax returns should be assessed, what is the process for assessment, how is the scrutiny going to take place. All of that has been condensed and added into one single textbook, which is called the Income Tax Act, right? Now, if you want, you can go and buy this Income Tax Act. But what really happens is that every year the government releases a budget document. Now, what is a budget document? So, in India, it's definitely a big announcement of a budget that happens every financial year on the 1st of February, when the government comes out with various tax proposals and also various other economic proposals. Now, whatever tax proposals are announced, so I'm sure if you had a chance to go through a budget speech or perhaps look at the newspaper on the day of the budget, you will see that it's a big event in our financial lives. So whatever tax proposals are made in the budget, they go into a finance bill. It's called a finance bill. And once that bill is approved by the parliament, it becomes a part of the Income Tax Act, right? So every year there are tax proposals, they are made through the budget. This budget is called the finance bill. The finance bill is approved by the parliament, and once it is approved, it goes and becomes a part of the Finance Act. So the Finance Act, which was first put in place in 1961, is updated every year through the budget exercise, right? So therefore, budget, if you are interested in direct taxes, then budget is an important financial event that you must watch out for. You must keep track of it, and it'll help you keep yourself updated with whatever is happening on direct taxes, right? So that's some ground setting on everything that you should know before you dive into income tax return forms, before you understand what income tax return filing is all about. We've kept this e-learning course very basic and simple. So even if you're not from, say, a finance or a CA background, you will still understand everything there is to know about tax return filing. And I encourage you to ask your friends and other people also to take this course so that they know the basics of income tax return filing. And at today's times, it's very important to take full ownership of your tax returns, to fully understand how you're doing your taxes, how you're paying tax to the government, and not to depend on any other person. Just take full control of how you do your tax returns, right? So let's go ahead with this. All right, we've also done a quick test here. You can ask yourself these questions. You can, just to understand how much you've grasped the course. Here are certain questions. Just go over them quickly, and here are answers as well. So, which tax is applied on sale of services? It's indirect tax, or also called GST. Which tax pay on her income in India? It's like you already might have guessed, it's the income tax. On which day is budget presented every year? It's the 1st of February of every year, right? Let's move on to the next portion of this course. Here are some important terms that you must know. Now, if you have anything to do with finances, well, the first and foremost thing that you must know is what is a financial year. So in India, a financial year always begins on the 1st of April and ends on the 31st March of the next year, right? A calendar year is 1st January to 31st December, but a financial year in India is 1st April until the 31st March of the next year. Now, every country has a different financial year, but this is the one that we have in India. Now, if you're doing taxes, you will definitely come across another term, which is called assessment year. The way to remember it is that assessment year is the year which always follows the financial year and is the year in which your income is assessed, right? So the year in which your income is assessed is the assessment year. Now, the income of a particular financial year can only be assessed after the financial year is ended. Therefore, the way to remember it is that the financial year, whatever it is, the next year is the assessment year. And these are also called FY and AY. So we've given an example here. If you're looking at 1st April 2019 to 31st March 2020, then your financial year would be 2019-20 and your assessment year will be 2021, right? So you're going to be filing tax returns for this period in the coming few months. And we've just started with the new financial year, which is 1st April 2020 until 31st March 21, which is financial year 2021 or assessment year 21-22. Now, very importantly, it's mandatory to understand these terms. These are very, very basic, because every time you file your tax returns, every time you receive a notice, it will relate to a particular assessment year, it will relate to a particular financial year. So learning these two terms is very, very essential. All right, let's move ahead. Okay, there's one more common term which is called assessee. Now, assessee is somebody who pays tax or somebody who needs to be assessed. You can also call this person a taxpayer. A taxpayer could be an individual, a company, a firm of partners, just anybody who has a tax to pay, who has a PAN is called an assessee. You'll come across this term if you're looking at tax return forms or if you're reading about something on direct taxes. This is one term that will get mentioned very often. The other thing which is very relevant and very important to understand is deductions. Now, what are deductions? Now, deductions very simply is something that reduces your total taxable income and reduces the tax that you need to pay, right? So yes, a fancy term, but very, very important. If you have total income, whatever it could be, say you've done a freelancing assignment and you've earned ₹1,00,000. Now you want to reduce your taxable income. So whatever deductions that you can claim from this total income is your it will be under deductions. Now, the Income Tax Act has laid down certain deductions. These are under Chapter 6A. If you are a CA, you might have come across this during your education. If you're dealing with taxes, you may have heard of this. So, the entire Chapter 6A is the deductions. They're usually associated with Section 80. So, you will see there is one Section 80C, there is 80D, there is 80E, and so on and so forth. And these various sections allow you certain deductions based upon what you have already spent or money that you may have invested. On the basis of that, you're allowed to claim deductions. Now, you reduce these deductions from your total taxable income and reduce the total tax that you have to pay. You'll find a lot of reading material on clear tax. You'll find a lot of examples. So I encourage you to go to our website and look for information around deductions and look at, we've just put together a couple of examples here. But very important to understand what these deductions are, because by using them, you can reduce your tax outgo. The other important thing to know about taxes is TDS. Now, TDS is basically your tax deducted at source, right? So, tax deducted at source is TDS. Now, what really happens is that we may be earning an income as the time passes. Every month end, we get salary from our employers. If we are freelancers, then we may be getting income at the end of a certain milestone. It could be after 2 months or 3 months or whatever. But the government, if we all pay taxes only when the financial year gets over, then how will the government earn money? So the government has put in this process of TDS, and it basically, just to understand it, it means that as you earn an income, the government wants to earn its taxes, right? So that's TDS. You earn salary income. The government has asked the employer to deduct some taxes before paying you and pay it to the government. So as you earn, the government also earns in the form of taxes. And all of this is done through TDS. Now, TDS is actually a very important exercise for the government to not only earn taxes as you earn an income, it's also important for them because that's how they will know that there are certain people who have earned incomes because they have faced TDS. So if you don't file a return, the government already knows that there was a certain TDS which was deducted from your income, and it can reach out to you asking you to report that income and pay tax on it, right? So the way TDS really works is that if you are salaried, then TDS is deducted according to your tax slabs. But on most other incomes, say if you're a freelancer or if you've had interest income, you've made certain deposits and somebody's paying you certain interest on some income on it, all of these people will not know what is the tax slab you fall under, right? So there are these certain fixed rates of TDS on the basis of which they deduct tax. But your employer broadly knows your total income because your salary income will usually form 80 to 90% of your total income. Therefore, your employer will deduct TDS based on tax slabs that apply to you. But most other people, say banks, or if you're a freelancer, then you'll have say your clients or customers, they may be deducting at a flat rate of 10% or some other rate based on what the Income Tax Act is guiding them to do. But employer will always deduct TDS based on the tax slabs that the government announces. Right? So everyone will, before paying you an income, people are mandated to deduct tax. Your employer will deduct tax, go and deposit it with the government. Your bank will deduct tax before paying you interest, go and deposit it with the government. And every TDS is actually linked to a PAN number. So that's how the process works. The government knows that there is this PAN which has earned an X income and Y TDS has been deposited with us, and that's how they can capture all the TDS against your PAN, right? So very important thing to understand TDS. There's an example here. I encourage you to go through this, and once you read this example, it will become even more clear to you. All right. So after understanding TDS and deductions, let's also talk about allowances. Now, allowances, as you may have heard, or you may be receiving an HRA or an LTA. Now, these are allowances that, are just a different way for your employer to pay you salary. It could be called house rent allowance, it could be called leave travel, somebody may have a conveyance allowance, others may have a special allowance. So these are basically just ways and means for the employer to pay you salary through different allowances. The Income Tax Act, the one that we spoke about, has information on how these allowances should be taxed. There are certain mannerisms on the basis of which, some laws on the basis of which tax should be deducted or an exemption can be claimed on certain allowances. Say, for example, you are living on rent, you are paying rent, then you can save tax on your house rent allowance, right? If you go to our website, you will see that we try to cover every single allowance, every single type of allowance that an employer might be paying, and you can read about them in more detail. Now, why is it important to understand allowances? Because every type of allowance may have a different way of, exemption on them, or a different way of calculating tax on them. So it's important you understand what your salary slip is. If you're filing taxes for somebody else, you should understand what are the kind of allowances they have earned, so that you can guide them how they can save tax on these allowances. The other important aspect is exempt income, right? Now, exempt income is something which is not to be taxed, right? You don't pay any tax on this income, but many a times the government wants you to report your exempt income in your tax returns. Why is that? Because the government wants to collect data on, what kind of incomes people have been earning. Some people may be reporting a large exempt income. For example, agricultural income is exempt from tax. So it may be possible that, your taxable income is only rupees 4 or 5 lakhs, but you have, say, about 20 lakhs or more than that of exempt income from agriculture, then you may have to report it. And that's the reason that the government says that if you have exempt income, please report it in your tax returns. It may be collecting data, it may be collecting information from taxpayers. It's important to remember that exempt income is not something which we can call a tax-free income. All right, so a tax-free may be something else. It may be specifically allowed, to you, that no tax will be levied. But exempt income is something which the Income Tax Act says that such an income is entirely exempt from tax, no taxes to be levied, but still very important to report them in your tax returns. All right, moving on to some more important terms. Many a times we hear exemption limit, or minimum exemption limit, or minimum taxable income, right? We hear all of these terms. So just to give you a quick backdrop, in India, there is a basic exemption limit, which means there is a basic amount of income which is not taxed for anybody who's paying taxes in India, and that limit is currently at 2.5 lakhs, right? So 2.5 lakhs is our basic exemption limit. But remember, there may be certain deductions, and we spoke about deductions. So there may be certain deductions. By using them, you may bring your total income to that 2.5 lakhs benchmark, so that you don't pay any tax. So therefore, 2.5 lakhs is called a basic exemption limit. If your income is 1 lakh, 1.5 lakh, 1 lakh 70, you're still below the 2.5 lakh mark, and you will not pay any taxes, right? So that's basic exemption limit. And next we come to income tax slabs. Now, slabs means that the government has defined that, this is the manner in which taxes will be calculated. Up to 2.5 lakhs is exempt. Then there is a next slab where a tax rate is defined, and then further there are slabs. Now, the slab only means that, let's say, if your total income is 7.5 lakhs, right? So up to 2.5 lakhs, no tax. Then your income from 2.5 to 5 lakhs, you will compute 5% of 2.5 lakhs, and then the remaining 2.5 lakhs, which are above rupees 5 lakhs, will be taxed at 20%. Now, some of these tax rates have undergone a change. There has been a new regime in place, and we'll talk about that separately. But as a basic, these are the income tax slabs which are applicable to you. Your exemption limit may be higher if your age is more than 60 years. Up to 80 years, the exemption limit is 3 lakhs. For all those who are more than 80 years old, there is an even higher exemption limit, which is rupees 5 lakhs. So very broadly, this is what exemption limit and tax slabs are. Now, very, very essential to understand how tax slabs apply, even though you will never have to sort of compute them yourselves, because you will find there's a calculator on ClearTax. You can use our return filing software to compute your tax applicable, so you may never have to physically perhaps apply these slabs, but it's still important to understand how these work, because the moment you cross a 10 lakh threshold, then whatever you earn above 10 lakhs will get taxed at the rate of 30%. So it's just from a conceptual point of view, it's very important to understand how the slabs apply. It's not like that if you're earning say 11 lakhs, then your entire income will be taxed at 30%. It goes through that slabs, and when it moves into the next slab, a higher tax rate may apply. Right? So I hope that has been helpful. Let's quickly move on to the next one, which is cess. So cess is basically applied on your total tax. In India, there is a cess, and it's also called the health and education cess. Its current rate is 4%. So whatever may be your total tax computation, say you've calculated your total tax to be 1,000 rupees, then you add another 4% to that, and that's the total amount of tax you will pay. So it's tax plus cess that you always pay to the government. It's not just the slab rates. You add another 4% to that. Whatever your slab may be, the 4% cess will always apply, right? So that cess, but some people may also face a surcharge, which is a tax on those who are in super high income earners, which applies after your total income exceeds rupees 50 lakhs. And there are certain slabs of it. So you'll see there's a 15%, there's a 25%, and there is also a 37% when your total income exceeds rupees 5 crores. So cess everyone will pay, but surcharge will only apply once your total income crosses rupees 50 lakhs. And mostly you don't have to worry about this, because no matter which software you're using, your taxes, your cess, your surcharge will get automatically computed. But it helps to understand what kind of tax incidents you may be facing on certain incomes. Say if you're calculating what is your interest income, how much tax you will pay on it. So it's important to factor in the cess and the surcharge also, to really understand what is the exact incidence of tax that you will face on any income that you will earn. Because ultimately you not just pay tax, you pay the cess, and if you're in a very high income tax bracket, you're a high earner, then you may also end up paying some surcharge. All right, let's just test what you have learned. Um, what will be the corresponding assessment year for financial year 2019-20? The answer, as you may have guessed, is assessment year 2021. Who collects TDS on salary? The answer is your employer. Give some examples of deductions under Income Tax Act, and there are a host of these deductions, and you can read all about them on ClearTax. And I really encourage you to go to our website and explore more about how these deductions work, so that you can help yourself, you can help your clients, and you can learn everything there is to know about these deductions. Okay, what is the basic exemption limit for individuals below 60 years? I'm sure you all might have already guessed. It's 2.5 lakhs. Moving on to next, here are different types of taxpayers or types of assessees. There are individuals, then there are Hindu undivided families. You could be a company, a partnership firm, a limited liability partnership firm, or you could be an association of persons, a body of individuals, or a local authority. Now, this is only the manner and the form in which taxpayers may be constituted. Now, the way to look at this is, I'll just help you understand, is that say you are, you've incorporated a company. Now, let's say the company is called XYZ Limited, and you are the CEO of that company, or you are, say, an important person in that company. You will still be filing two tax returns. There's going to be a PAN number and a tax return for that company, and there's going to be a PAN number and tax return for you, and therefore you two people are separate taxpayers, are separate assessees in the eyes of the law. And therefore that's what we are trying to help you understand from this particular slide, is that even an entity is a taxpayer. So a company could be a taxpayer, a partnership firm is a taxpayer, separate from its partners. So the partners may be filing their own tax returns, and a partnership firm will also file a separate tax return. It may have its own PAN number, it may have its own books of accounts, and everything separate from the partner itself, right? So these are the forms in which an SSE may be incorporated, may be constituted, and therefore there may be these different types of tax returns, and we'll come to those in a little while. Okay, now before we begin to understand tax return forms, here are these 5 heads of income that you must know about. Now, in India, whatever income that you may have earned in the financial year must fall in one of these 5 heads, right? So that's the basic premise. Any income that you earn, see where it falls and report it under that head in your tax return. You may have income from salary, very easy to understand this. It's income from your employment agreement. It could be your pension income, and it has components like your allowances. We just spoke about allowances. It's not exactly your CTC, because CTC is what the employee is bearing, but it is what you have earned as an employee. It is what has been paid to you as salary. Uh, it is taxed according to slab rates. Now, coming to income from house property. Now, income from house property, very easy to remember, is usually your rental income, right? Not the income from the sale of your house, but just the rental income. That's your income from house property. Now, if you're paying any interest on a home loan, then whatever deductions you claim will fall under this head. So that's the importance of knowing about income from house property. Not many of us, not all of us may have rental income, but many of us may have an interest outgo on account of a home loan, and that deduction comes under income from house property. You may also have a loss from a house property. That's when you're not earning an interest, but you're paying. That's when you're not earning a rental income, but you're still having an interest outgo, is when you have a loss from the head house property. Coming to capital gains. Now, capital gain income is always from a capital asset. That's how you can remember it. Capital assets, some quick examples: a house property, a piece of land, a building, some jewelry, some valuable paintings. These are all capital assets. Your mutual funds, equity shares, debt mutual funds, these are all capital assets. Any income that you have when you sell them, remember, income from capital gains always happens when you sell a capital asset. So that income is reported under this head. There are certain exemptions that you can claim when you have a capital gain, and you may also have a capital loss. Of course, you know that you may be selling an equity share or equity mutual fund. If you've incurred a loss, even that falls under this head. It's called loss from capital assets. And then you may have income from business or profession. If you are a doctor, a lawyer, an architect, a CA, your income may be reported under income from business or profession. But the moment you are an employee, let's say you're a CA, but you're working with a company who's paying you salary, all that you earn will go and sit under income from salary. So that's the big difference. If there's an employment agreement, your income will be income from salary. But if you are a freelancer, you're a professional, you're running a business, you're a proprietor, whatever you're earning goes under income from business. Perhaps that's a very important aspect about income from business, is that it allows you to claim certain expenses from the income that you have earned. So this one is really important and critical to understand how really income from business works. And we have a wealth of information on our website, and you must go and see it. The 5th head of income is called income from other sources. It's called the residual head of income, but some important heads, some important types of incomes are reported here, which is your interest income from a savings account, your fixed deposit interest income, if you have family pension, or if you have, say, any other income, you have a gift which is taxable, all of that will get reported under this head. All right. There are some important forms and documents that you must know about. The first and foremost is your Form 16. A Form 16 is like a certificate that your employer hands over to you. Now, this form has basically two parts. It will give you information about the employer, about their PAN, about their address, and other information. And it will have a complete breakdown of the salary that has been paid to you. A Form 16 is proof that your employer has deducted taxes on what has been paid to you and has gone and deposited those taxes with the government. So, a very essential and basic document that every salaried person must have if they have faced TDS. On Clear Tax, you can simply upload your Form 16 and we will automatically prepare your tax returns. So, a very important and basic document that you must have if you're doing taxes and you have salaried income. The other important form is your Form 26AS, and this form just sort of think back about when we spoke about TDS. Now, this is the form where all your TDS is merged and put together in a single place. So, if your employer deducted TDS, if your bank has deducted TDS, if you've sold a property and the buyer has deducted TDS, every single type of TDS will go and sit in this form. It's called the Form 26AS. It can be downloaded from the government's website, and it is very, very critical to review this form to understand the various entries and the tables in this form. There are different parts to it where different types of TDS is plotted. Now, what the government does is that it will look at your Form 26AS and it knows that these are the incomes you have earned. So, very, very important to sort of do a trace back and make sure that whatever TDS is appearing here, the corresponding income has been reported in your tax return. So, in that sense, this is an essential form. You will not be able to proceed with your tax return without this form in your hand, no matter what kind of income you have earned. A Form 26AS is critical to filing of your tax returns. So make sure that when you begin filing a tax return, you have this form in front of you and you've reviewed every single entry that appears here, so that you capture all sorts of incomes that you may have earned, and also TDS. Now, TDS is tax which has already been paid by you on an income. And let's say if you have, it may be possible that TDS has been deducted at the rate of 10% by the bank on your interest, but you fall in the 5% slab. So, if you use this form, you will know that a certain TDS was deducted, but your total slab, your total income falls under the slab of 5%, and therefore you may be in a refund situation because some extra tax has been deducted and deposited from your income. And by using this form, you can claim a refund of those taxes. Now, when you're filing on Clear Tax, you will see that you will be able to directly get information from Form 26As populated onto your return, and we'll make sure that every single TDS that appears in this form has been captured against all your incomes, and therefore you have a clear picture of all the taxes you've already paid, and in case you have any refund, you can claim it easily. Okay, now this is a snapshot about who should file an income tax return in India. Now, basic premise: if you have an income, if your total income exceeds rupees 2.5 lakhs, then you must file an income tax return in India. There are also certain other situations where you may have to file a tax return, and I'll give you an example, which is also mentioned here. Let's say if you are, a person, a housewife, or any other person who doesn't have taxable income but ended up selling a house property. Now, you still don't have any tax because you invested whatever you got as capital gains into another house property, and therefore you don't have any taxable income. But such a person still must file a tax return. They have to report the transaction of the sale of that house property, the investment of those capital gains, and claim that exemption by filing a tax return. So very, very essential to file a tax return if you've had any important financial events, if you've sold a house property, if you, let's say your income is below 2.5 lakhs, but you want to claim a tax refund. Somebody deducted TDS before paying you and you want to claim a refund. So that is the only way to do so. The only way to ask the government for a refund of taxes is by filing a tax return. So anybody who's claiming a refund, somebody who sold a house property wants to claim capital gains exemptions, anybody with income in excess of 2.5 lakhs. Remember that that threshold increases to 3 lakhs and 5 lakhs based upon your age, but all of these people must file a tax return. A company or a firm has to file a tax return even if they don't have any profits. So if you have losses, please file your tax return. Now, if you are an individual who has earned losses, let's say your total income is up to the 2.5 lakhs threshold, but you sold certain equity shares, you sold equity mutual funds, or any kind of mutual funds, and you have incurred a loss. Now those losses are also beneficial to you because you can carry them forward, you can knock them off against capital gains in the coming years, and therefore anybody who wants to carry forward their losses so that they can knock them off against gains in the future years must also file a tax return. So a lot of people come and ask, I don't have taxable income, my income is less than 2.5 lakhs, but I have either equity gains or I have capital gains or capital losses. Should I file a tax return? Yes, the answer is yes. If you've had any losses, please report them in your tax return. If you've had any gains and your tax is below the limit, then still you must file a tax return. Now, remember one more thing about this is that even though it mentions the 2.5 lakhs threshold, let's say if your total income is 3.5 or 4 lakhs, and by taking benefit of deductions, you can bring it to 2.5 lakhs and you don't have any taxes to pay. Even in that situation, you must file a tax return because any deduction can only be claimed by filing a tax return. So, don't assume that, okay, my total income is 4 lakhs, 5 lakhs, 6 lakhs, and I've claimed ATC and I've claimed certain deductions and I've brought it to the 2.5 lakhs limit, and therefore I don't need to file a tax return. No, this 2.5 lakh limit is not your total taxable income, it's your total income. So if your total income is 2 lakhs, 2,50,000, and or less than that, you don't file a tax return. But the moment you want to claim a deduction, that deduction can only be claimed by filing your tax returns. Right? I hope this is clear to you, and very, very important because people often question if they are supposed to file a tax return. A lot of people say TDS to cut gaya, ab mujhe tax return file nahi karna hai. Please file kariye. Even if you have TDS, you may be in a refund situation, and the only way to claim a refund is by filing your taxes. Okay, here's a quick test of what we just learned. Where will rental income get taxed? Which form shows the details of TDS? Is it mandatory for companies to file tax returns? Under which head of income should I report sale of a house property? Which part of Form 16 gives you annual salary breakup? I'm sure once you have a Form 16 in your hand, now that you know how important this is, you're going to review every part of it. You're going to review your Form 26AS so that you know how to go about your taxes. Now, coming to income tax return forms. What really happens is that the government releases income tax return forms every year, right? So every year they will release a new set of forms. They may have certain additional information that they're seeking from you. It may be as a result of their own analysis or, due to a certain change in a tax law. I'll give you an example. Say, for example, couple of budgets ago, the government made long-term capital gains on equity shares taxable if they exceed rupees 1 lakh. Now, to incorporate this change, there has to be a change in the ITR forms. So that's the reason that the CBDT will come out with new tax return forms every year. Usually they are the same. They try to keep them same, like ITR 1, 2, 3, 4. But sometimes there may be a change. Every year there's a change. And on ClearTax, you will see that, we, as soon as the forms are released, we update our website and you can start filing on it. We incorporate all the changes that have been made in the tax return forms. Mostly there are 7 types of ITR forms. But note that new forms are released every year, but the largely the basis remains the same. Couple of years back, they completely changed a few things. Business returns became very different. Some more information was asked. So important, the relevance of knowing ITR forms is that when you're filing a tax return, you must know which is the form relevant for that year, right? Now this problem is completely solved if you're filing on ClearTax, because you simply select which financial year you're filing a return for, and automatically we only show you the form relevant for that year. Therefore, not to worry about this. Also, one more thing on ClearTax, you don't need to choose which ITR form applies to you. Just keep on filling up your information, and we automatically, based on the information that you've given, we automatically select the return form applicable to you. So this is one thing you never have to worry about when you're filing on ClearTax. Okay, here's a brief on the income tax return filing process. Like I said, file ITR online, go to ClearTax. You can submit your ITR from within ClearTax. You will receive an acknowledgement. It is also called an ITR-V on your registered email ID. Now you need to verify your ITR. We highly recommend that you do this online through a net banking or any of the other online processes to e-verify your tax return. Extremely critical to verify your ITR, because unless you verify, your return filing process is not complete. Your return will not be processed. Therefore, 3 steps: file it, submit it, you will receive an acknowledgement number, and then go and e-verify it. So verification is a critical step to your return filing process. Make sure you do it. All right, here's a quick look at different types of ITR forms. I'm not going to go through all of them. You can read about them in depth on our website, but just the couple of forms, ITR 1, 2, that you must know about. Large number of people who file tax returns use ITR 1. It's applicable to those with total income up to rupees 50 lakhs, those who have a single house property, those who have income from salary, file this form. The moment you have business income or you have capital gains, you've sold mutual funds, you've sold equity shares, you will not be able to file this form, right? Usually the return filing date is 31st July of the assessment year, but yeah, it's always good to file your tax return by the due date. There are several benefits to that. So usually this form is due by the 31st of July. Very basic form, simple form. And if you're using ClearTax, just upload your salary income, upload your Form 16. We'll get all your TDS from Form 26AS, report a couple of other details, and you will finish your return filing. Okay, here's ITR2. It can be filed by those who have rental income. It can also be filed for capital gains. Then you will be able to report any foreign assets or foreign income that you have earned during the year. And all these return formats are due by the 31st of July. All right, here's ITR 3. Sometime back, the government had revised ITR 3. It's now the form applicable to those who have income from a business or a profession. This one is an extremely detailed form. You can read everything about it on our website, and you'll be able to file it. You can file any of the ITR forms on ClearTax. It could be ITR 1 or ITR 2, ITR 3. Any of the ITR forms can be filed on ClearTax. Now, here's a quick look at some of the other ITR forms applicable to different types of taxpayers. All right, that's all that we have to offer to you on income tax return filing. an e-learning on direct taxes. I hope this has helped you understand some basics around income tax return forms, around how taxes are filed, what are some essential documents, what are some important terms. I encourage you to read a wealth of information that we have on our website. Also, some bit about ClearTax. We are an all-in-one tax software. If you're a CA, you can use our Tax Cloud product. It can be used for filing of income tax returns for all your clients. You can do TDS compliance through ClearTax TDS. You can file your TDS returns, and it's actually a very intuitive form. It helps you compute your values. It has really simplified how compliance looks on TDS. So I encourage you to give it a try. Also, ClearTax GST. This is India's number one GST compliance product. We have a host of software. We have reconciliation tools. We have analysis tools, and you will benefit greatly from this. Even if you have a small business, or if you have a large business, you can use our ClearTax GST. You can analyze your GSTR1. You can look at your GSTR2A, and you can make sure that you're paying taxes accurately, you're claiming ITC accurately. And if you are a CA, then you can use ClearTax GST to collaborate with your clients. So it lets you upload data for different clients, analyze it, and you can, from within that software, you can collaborate with your own team and also your clients. So especially in these times, these softwares are coming in very handy. We are seeing a lot of interest for people who are stuck due to the lockdown situation, who want to use cloud-based software where you don't need to download and upload a lot of things. Just use a simple web page, see what the your data looks like, analyze it, and in a single click you can run reconciliations and upload to the government website. So I encourage you to try this, our products, to look at our products, and always feel free to write to us, give us your feedback, uh, and uh, and I wish you all a very safe and healthy period of lockdown. Stay safe, be at home, and keep learning with us, keep reskilling yourself. This is an important time that we can utilize, and make sure that submit your entries for becoming a ClearTax champion, and we are definitely going to feature you. Thank you so much. Goodbye.